Hey, I want to tell you the difference from a good automation strategy and a bad automated strategy. I want to show you the difference from a good automated strategy to a bad automated strategy. Let's get into it. So as you can see, I got two different pictures up. One is good, and one is it looks good, but it's not really a good trading thing long term. Um, as you can see on my left side over here, this is what you want to see. You don't necessarily want to see nothing like this, and I'm gonna show you the difference and tell you the difference. So basically, as you can see, your green is equity and your blue is balance, right? So we're gonna go over here. So if your this is your balance, the blue, and this is your equity, the green. As you can see, the equity is always on top. It's always on top. If not always, most of the time on top, right? And the down draw are little. When it's under the blue, it's a down draw. That's what that is. And it's little. But your upper part is very higher. See, high. And as you can see, when you win a trade, the balance bounce, of course, like it's supposed to. Okay, now on my right side, as you can see, your equity is always at the bottom. It's always at the bottom, and that's not really a good sign. That's really a good short-term strategy, and usually when you see this, it's a grid trading strategy. Which a grid trading strategy is, it's using a margin. If you don't know what margin is, long story short, they use it in casinos. When people bet, sometimes they do the margin strategy. The margin strategy is when you lose, you double up the next time you play. That's all that is. So basically, let's say you gamble $10, you lose that one, you gamble 20 next. Then if you lose that one, you gamble 40 next, and you keep gambling like that until you win, or you blow your bankroll. Basically, that's what they call it, bankroll in gambling, but you would say blow account. So as you can see, look at your down draw, and plus it doesn't look so bad when you look at the side numbers, but at the same time, it's not really making that much money over time. So it's not really, because you gotta think about it didn't really make a lot of money over time. It's not really a good strategy. And as you can see, the green is always at the bottom. So what that means is, I'm gonna tell you what it means when you use the margin strategy in trading. This is the margin strategy in trading. So basically, as the position, let's say they bought. The position keep going down, the price keep going down, and they bought. So as price keep going down, they keep entering buy trades. So they basically keep entering buy trades. So basically, their first trade might be 1 cent. The second trade might be 2 cents. The third trade might be 4 cents, and they keep doing that until price go the right direction. And when price go their direction, they don't necessarily wait to profit. They might go to break even and close out all the trades. Waiting to profit is risky too, because that's a whole nother thing though when you're grid trading. But you don't really want to see your trading doing this. And yeah, it looks good short term, but long term it doesn't look good. You can blow your account because it can keep going the wrong direction, and sometimes it don't even come back in certain prices. I done looked at the Forex chart, and it done went down from certain prices and never went back to that price. So if you did the margin strategy in that price range, you definitely blew your account, and vice versa. I seen that with sales too. So I seen that with buys and sales both. So you don't really want to see nothing like this. You want your strategies to be looking like this. You want your green to be up top. And plus, like this is not really using a SL, which is a stop loss. And traders know not using a stop loss is pretty bad. That's really, I don't think anybody recommends that. That's not that good. Using a stop loss is definitely not good. But this uses a stop loss. So that's why you can see when the green is below the blue, it stops. But as you can see here, the green is always below the blue, so they don't have no stop loss. It's always below the blue. And as you can see how much that dropped right there, how much it dropped right there, it keep dropping. And this over here doesn't do that. Most of the time it's really above this right here is never above. So basically just using a martingale strategy, sometimes breaking even, sometimes making profit. Like right here, you probably made profit. It just closed, kept making money, making small amounts of money too. It's scalping at the same time. This is scalping. As I can tell, it's scalping because it'll close, a dip, close, then a dip. So you don't want nothing look like that. But right here, these are stop loss and TP, and the green is above the blue. That's what you really want to look for when the green is above the blue. If you see anything, or you see, not gonna say any names, but if somebody's selling a bot or an automated trading strategy and their graph it look like this, or anytime it's like majority of the time the green is below the blue, that's not a good strategy. It might, yeah, you might win short term, but you eventually will blow your account. And if you are winning short term, it's not really that much money compared to what you can lose. You might end up losing all the money you done gained off one drawdown, because as you can see, look at this, look at it, you see how it went up, it kept going up, then this big drop right there, that big drawdown right here took out everything they made right here. So if they would have closed their trade right there, or the account would have blew right there, it would have blew all this profit they made over these months would have been for nothing. And it went farther than here, right here. It went farther than right here. It went farther than that. So as you can see, like I was saying, it went farther than here. So you would have lost all your money right there. For what? Made no money. You would have lost all your money for what? And all that money would have been, all that time would have been wasted. But here, look at it. Kept making money. See, it might have lost right here and went down, but it came back up anyway. Plus, it was using a stop loss. Yeah, this looked like a good curve because it went straight up, but it's really no like stairs or no climbing, like no, because look, if the balance would have went down right there, you would see something similar like this would have dropped right here. And that's okay to lose. That's what's part of trading. It's okay to lose sometimes. That's not a problem. Right here, you really not trying to lose no trade, and you gonna end up losing the most money ever. So I advise to stick with things like this. Let me see. I'm gonna get another example. Okay, this is another example. This is what you don't want to see. See, I'm about to show you. This is not what you want to see. So, as you can see, the green is above the blue most of the time, and it's climbing. The blue is climbing, and the green is above the blue. That's a good sign. Most of the time, that's a good sign. But this usually happens when you using a stop loss. Now look here. Yeah, the greens are below, above, below. Now I start. See, look how much drawdown it is. Went up. It didn't take TP right there, because if it did, this blue would have jumped up there. It didn't. So it was held in for some reason. Drop down. Now look at this. This is all drawdown. And let's say you don't have $100,000 in capital. That will blow your account. That will definitely blow your account. Actually, they lost money because their balance dropped. Their balance dropped from all the way up here to all the way down here. They had to recuperate all their wins over time again. When, as you can see over here, it was more of a, I want to say progress. It was more progress, but it kept making money. More progress, right? But look at here, that drawdown. So you don't really want to have a trading strategy when the green is on the bottom. And I'm testing this on MetaTrader. If you test your strategy on MetaTrader, this is what you'll see. You'll see this chart on MetaTrader. But whatever you use, and they use a chart, and it does show like certain things like this, it shows your equity and balance. You want your equity to be up top of the balance most of the time. You don't want your equity at the bottom or see big dips. And if you buy a EA, you don't want to see their back test having the green at the bottom. most of the time. I mean, it's okay to have it sometimes because you're gonna have drawdown regardless. But most of the time, no, you don't want to see that. You want to see it green up top most of the time. And when you see that, that's usually a good sign that EA does work long term. EAs like this usually work short term. EAs that just has a lot of drawdown and green at the bottom, that they usually work short term, but not long term. Another one I can show you here. As you can see here, you see the blue went up. Blue went up gorgeously. I mean, the blue went up good. It looks good when it goes up, right? And as you can see, it's a pattern. Like, as you can see, it's a pattern. It's like when you see the blue just like go straight up like that, and it's not really no progress. Like, some of these got progress. Like, look at this. This is progress. As you can see, and you look at this is like progress. Like, it goes down, up, down, up, down, up, down, up. Over here, it just goes straight up like an airplane. It's linear. It goes straight up. No progress really. But as I was telling you, look how bad that looks. Look how they almost blew their account. The green is always at the bottom. See, you're mostly in drawdown most of the time, and this is probably using grid trading. Like I said before, it's probably using grid trading. And your green is always at the bottom. Always at the bottom. And look at this. This down draw was more than they made right here. It's more than they made right here. And eventually, it will be a time where it blows. It'll go all the way down and blow your account, and you'll lose all this progress will be gone. So it's good short term, and as you can see, they only ran it for like 3 months. Do the grid trading strategy or any strategy that has a look like this and run it long term. It's gonna definitely blow. I give it about 2 years before it blows. It might not even take that long. It might do it sooner because it's points in the market where price never goes back. Price never touch that price again. Never. It just drops all the way down, keeps dropping. And if you catch that, it's over with your account. So, long story short, just to sum everything up, you just want a trading strategy that has the equity above the balance most of the time on the chart. That's what you want. You don't want the equity always at the bottom. That's a bad sign. That means you're always in drawdown. And if you're always in drawdown, you can't really withdraw your money either. So you'll have to wait until all your trades close to withdraw your money, instead of just withdrawing your money when you hit TP. Because these strategies right here usually use no TP. I mean, no SL, no stop loss. These strategies usually use no stop loss. These strategies uses stop loss and TPs. Yeah, this strategy probably use a TP, but what is a TP with no stop loss? A blown account. So yeah. That's it. Bye.